anyone do what I did last night? Did anyone make the horrible mistake of staying up and watching the Green Bay Dallas game? I was in bed. It was 7 minutes left in the game. My wife came in and said goodnight, and I said, I don't want to watch this game. And then she said, well, can you take the dogs out? So I take the dogs out. Then she starts making me do all these other chores. I have to start taking out all of the recycling. And now I'm up. And I sat there and I watched grown men tie in a football game. Why do we do this? What was the point of this? It's where we are. Good morning, Boris. Good morning, Buzz. Good morning, Doji, Eric in Northport. Hope everybody's having a good day. Yikes. Oof. Yeah, Bob's not happy about his decision. You loved that game, Jack? Did you like the outcome? Man, that was tough. After a long day, that was not what I was trying to stay up to do. The Bears did win. I think everybody's equally surprised by that. This is what I look like now after watching that football game right here. All right, let's kick it in. All right, we're into momentum. We're going to talk about what's going on today. Key things, really, again, it's about the fact that we touched off that 20-day moving average that we discuss on a constant basis. For some reason, my screen isn't sharing. Give me 1 second. There we go. That's what I look like right there. You feel it? Um, we'll talk about momentum. We're going to break down, obviously, key stories of the day. 9 o'clock, we do the runner. These are our breakouts and our breakdown stocks. And we'll dig into some other things, take some questions as well. Everybody ready? Are we ready, Lynette? Are we ready, DG Beaver? People cheering for ARK. That's something. All right. I look great. Christopher Lloyd, however, whew, my man. Remember, 9:30 in the morning, we open every single day. And if you are not prepared, you are the exit liquidity for this market. So we are up this morning, a tads, obviously, looking at the futures, you can see. Pushing back up to that 67.30 level. That's the number to watch. No, not cocoa. Gold, 38.44 and a rising. Continues to move higher. Silver was over 47 earlier this morning, and we're pushing toward that $50 level. We'll see where we go from there. But again, this is all about the dollar. We'll break all of that down this morning. We'll talk where smart money is positioning. We'll talk about the top stocks, trade strategies for the day, and we'll have some coffee. And we'll try to get over the fact that I watched a football game ended in a tie. Not for me. Broad reading, Russell 2000, remember, remains green. S&P 500 momentum on our intraday level is -3. But the key thing to keep in mind is that this figure was at -14 the other day, and a lot of money was coming out of the top end of the S&P 500. However, it has continued to flow back in. Currently, four negative sectors we are looking at the moment. We have consumer cyclicals still under pressure, communication services under pressure, consumer defensives under pressure, and of course the financials. And I want you to keep a very close eye on this. This is the S-Spiders S&P 500 Regional Banking ETF. You'll recall I spent a lot of time last week explaining what happened in the reserves of the banking sector. Obviously, there are concerns. The fact that we hit that $3 trillion level, effectively all of the cushioning of the market and the repo market is found in banking reserves. And if that number continues to decline, we will see pressure on not just the banking sector, but the entire S&P 500. But for right now, we are pushing back above that 20-day EMA and the 8-day EMA. If this breaks down, we have to have concerns about the state of the market. But for right now, the music is still playing and you need to keep dancing. Just make sure that you keep an eye on the door. On top of that, the SPY and the NASDAQ both remaining strong. Remember, if we go negative on that figure, we turn to the micro sectors FANG index. Look, don't try to read all these words or else your nose is going to bleed. You're going to hit your head on the table and they're going to find you on the floor. Just recognize that every time this breaks above its 20 and its 50-day moving average, that's where problems happen in the market. And the reason is this is where leverage is leaving the S&P 500. Remember, our markets are heavily leveraged. What happens is people borrow money, they buy stocks with that borrowed money, they use those stocks as collateral to borrow more money, they buy more stocks, they use those stocks to borrow more money, and they keep doing that. So $100,000 effectively becomes $1 million in margin. It helps keep equity prices up. It drives valuations higher. It keeps momentum strong. But when something goes wrong, momentum leaves the market, capital leaves the market, all of these positions have to be unwound and be unwound very quickly. And that's what we had happen in March and had happen in April. And what happened last year during the Nikkei crash? Japan had the worst day of its market since 1987. This is what happened when bonds went to 5% on the 10-year in October 2023. This is what happened when the Silicon Valley banking crisis happened. This is what happened when we had the gilt crisis in England, which was a period of the exact same thing that I'm talking about, where lots of pension funds leverage up on bonds, in this case, the gilt bond, which is the English bond, same way that we have 10-year treasuries, they have gilts. I don't know why they call them that, but I don't live there. I don't worry about it. But here's the problem. They all had to sell at the exact same time in order to raise cash, in order to move to cash. And the market collapsed. And then they had to step in and print money and bail everybody out. That's the history of this market. That's how this works. This is the Archegos crisis back in March of 2001. You remember what happened with COVID. All bad things happen over the FNGD. FNGD. Don't worry about what it is. Just recognize that when it breaks that 50-day moving average, that's where problems happen. And guess what? We're not there. We're not there. So despite all of the negative headlines, money is flowing back into this market as of this morning, and we will continue to monitor it and we will watch to see if we get back above these key moving averages and can press above that 50-day moving average. Watch the ADX, watch the momentum in the RSI and the MFI on this. Really just watch the 50-day moving average. So for right now, all clear. Doesn't mean it's not going to go negative tomorrow. Could happen next week, could happen next month, but we are on top of it. This is one of the key big macro things that we focus on every single day. But this is your threat. Short-term funding resolutions. All right, let's really just basically point this out. No one wants a funding crisis in the United States. But if we do have a government shutdown, there are other issues at play. And I want to remind people that it actually gets really tricky to be a trader and to be an investor in an environment where data does not come out. Okay? Now, hedge funds, they have access to data sets that are unique and different than other government-based figures, right? They put a lot of money into this stuff. If we shut down, we technically would not get a jobs report in November. We might not get a CPI figure. We might not get a PCE figure. We might not get all of those reports from the Department of Labor, from the Commerce Department. You fly a little bit blind. And it matters for one core reason, because of the information disadvantage that you have compared to large institutions. I don't worry about this. A lot of mainstream media groups will. And my point to make to you is you simply need to continue to watch the SPY, the Qs, the DIA, the TLT, and the UUP. The UUP being the bullish dollar ETF. Now, why do you want to do this? Because again, these technicals, these lines in the sand, the 30, the 8, 20, and 50, will show you flows as they are occurring. They will show you momentum as they are happening. And it's a reminder that price is the story, not the CPI number, the unwinding, the way that money is positioned around all of these big events. So if there is a shutdown, see it as an opportunity for you to learn to not follow headlines, but instead to start to understand positioning and volume and momentum and how these things truly drive price and drive the market and front run a lot of the information that might not be available over the next week, week and a half. No surprise here. I keep pointing this out. Um, Gold's going up and it's not going to stop. Wrote about this last March 2024, wrote a report called The Hedge of Tomorrow, and in it explaining that monetary inflation was going to continue to rise. And monetary inflation is going to continue to rise until at least the end of 2026. Gold is probably going to 4,500, if not 5,000, by the end of next year, barring a liquidity crisis. So, gold, again, we talked about trading the GDX, how to trade it. If you missed out on a rally, don't panic. Sell spreads to the downside. Find a point that you would be content to own gold miners who are having the best margin run that they have had, I think, in 4 decades. It might be ever. And if you don't want to buy the GDX, look and find another tool that you want to own in the gold space. It could be the GLD, it could be the GDX. But the whole time that you are focused on gold, this is a critical line in the sand. This is the UDN. This is the bearish index for the US dollar. The dollar's demise is the true driver here, the ongoing debasement of paper money. And you can see the UDN has gone pretty strong for the last 6 months. 1750 up to 1880. Now, how do you trade something like the UDN or the bullish ETF on the dollar? Well, when the UUP drops under a key moving average, you go out a month and you look at puts that are at the money. And what you're going to find is that the time value is chef's kiss perfect. The UDN breaking above these key moving averages, if you went long the UDN into October for the $18 call, you should not be paying any more than 85 cents. In fact, you're probably going to be able to get it at 80 cents. So rather than having 100 shares at $1,880, you can control the returns of 100 shares for about 80 bucks to 85 bucks. And if you get up to say that 1910 level, that's 85 looking to make $1.10 on every contract. Hedge funds are slashing their exposure to the emerging markets. Money is leaving China, money is leaving in India, money is leaving Taiwan. And yes, we have enjoyed the good time that is Alibaba. I want you to pay very close attention to Alibaba. It has had a great run. Pay attention to names like Weibo, which are pure momentum driven. They are currently holding above their 8-day, but if they break under their 20, the trade will be to buy at the $20 or at the 20-day put, whatever is at the money, and then selling at the 50 level and looking for a move from here to here. We're not there yet, but I just want to tell you right now, if money is leaving these places, watch the key moving averages on the FXI, the EEM, the INDA, Taiwan Semiconductor, and the MCHI. We had the biggest weekly sell-off in emerging Asian equities in 5 months. We're going to see if that continues, but we just picked up on that over the weekend, and I just want to note it. There could be more capital flowing out and then chasing returns here here in the United States. Finally, a couple of small things. Genmab's buying Maris, MRUS, and GMAB. Occidental is considering a spinoff of OxyChem, so OXY is in focus. And this is a stock that I really do like to sell spreads on. So I like to look down around that 43, 42 level out a month, month and a half, looking for a 20% return, 80% probability of profit, and 100% gain, annualized. That will be a trade that we're going to make today at 3 o'clock during our live hours. So if you're not a member of TheoTrade, look, get in the room, name your price, and you're going to get the Occidental trade, my favorite Occidental trade today, if you join us at 3 o'clock. Finally, look, everybody's into Intel, and I said it when I was at 18. This name is not going to slow down. There is immense upside for Intel, but again, same thing. Instead of trying to chase the upside of a stock like this, you want to know how you can pick the price you want to pay for it and then trade around it for a high probability trade by using what are called credit spreads. And once again, we'll be talking about that today at 3 o'clock. That means it is 9 o'clock, and at 9 o'clock, we do one thing. We do the runner. Ugh, coffee's terrible, but it works. All right, Rana. Good morning, Secret Agent Charlie. All right, we're going to start with our good old friend DRS, Leonardo. Hey, look, we have been very bullish on Leonardo from the start of the year, and the same play remains. You either want to chase the momentum that is associated with this name, because again, here you go. You see that 8-day moving average pushing above both the 20 and the 50-day EMA. So another retest, hopefully, of that $48 level. But two real ways to potentially trade this stock. And this is pretty simplistic, right? The first is to go lower probability momentum. Lower probability momentum. Actually, three ways to trade the stock. But what you're looking for here is back at that 50-day moving average, which is currently around 42.50. The $42 call for November is currently about $4. $42 call. So at the money, $42 call. And I'm going to tell you, I'm going to buy this stock at $42 all day. All day. Defense industry, focusing on relationships with Lockheed. There's a lot here. But the 42 is going to have to get to 46 to really make money. Instead, what I can do is I can turn around and I can sell the 47. All right. I'm going to run you through some mathematics. Mathematics. Ooh, sounds awful. Well, that's kind of how it all works, right? So if you go and you look at the options chain on this stock and you bought into November at the 42 and you sold at the 47, two different things you could do here. You can either do a spread, and this is something to really consider and think about because it's not something that I talk about very often. But if I'm comfortable to buy this stock at $42, do I want to either set the spread up that it would be the same expiration date, or do I want to sell it two times along the way? If I'm content to own the stock at 42, and that's really the key thing, I want to focus on this. Do I want to own Leonardo at 42? Yeah, I do. So if you do it through the construct of a calendar spread where you are willing to buy it at the 42 level and sell it at the 47, what this trade does, what makes this a little bit different than what you'll typically see with an ordinary spread, is that in the event that the stock does get above 47 by October 17th, you're going to have to execute, you're going to have to execute this November call in order to take possession of the shares and sell it on the date of settlement. Now, what does that do? Well, I'm going to walk you through some math real quick. If you buy the $42 call for November 21st, it's going to cost about $4 right now, hypothetically. Obviously, the math will change. But if you sold the October 17th call, right, the way that this is currently set up, what that's going to give you is it's going to cost you about $350 to $360. And your goal here, your maximum return, is about $216. That's a 60% return. Your probability of profit is 58%. But if you do the same date and you shift it where you're buying the 42 and you're selling the 47 for November, your max risk, your max opportunity, this is only going to cost you $245. Your maximum upside is 104, but your probability of profit drops to 52%. I prefer to do same expiration spreads. I don't want to have to manage things. Sometimes I forget things. I just like to keep it clean. But if you want to understand and dig into how to do these types of calendar spreads, that's one of the key things that we are going to be focusing on heavily with our Tesla 4D program. Very important, right? Because again, if momentum is very strong in a name like NVIDIA, and we are willing to own it at a very specific price, but momentum chops around, I want to try to take advantage of short-term moves and be willing to exit the stock and do calendar spreads. It's a totally different way of approaching expiration dates and using options. And it's one of the key things that we're going to be starting when we do our masterclass on October 7th and then carrying through for those 6 weeks. All right. On top of that, BBY, Best Buy. Ugh. I feel dirty when this name comes up. I was in a Best Buy yesterday. It's basically a glorified television uh, warehouse. I don't think people actually buy them. I'm starting to think it's a conspiracy. Best Buy is not really a stock I want to own, but it is a momentum name. And it's the exact same thing. You see that move right there, that 8 over that 20-day moving average. Again, staying in the money, somewhere around the $75 level, going out to October 17th, and just looking for a move to retest these highs. Again, this is all about consumer cyclical. This is all about just the basic focus on momentum. I prefer to short this stock because I don't like the company, but I can't deny that momentum has returned. It has bounced off that 50-day moving average. You stay in the money, you sell out of the money, and you keep a cushion in place just in case we have any pullback this week. I don't know what this stock does. Never. Oh, I know Talos. What am I talking about? Okay, so TALO is showing strong momentum. You see it in the RSI and the ADX. Here's the thing. I'm going to scratch this. And the reason for that is because I just don't feel comfortable right now in the EMP space based on the way that OILU is trading. We are not overbought. We are moving toward overbought here. So it's hard to go with pure upside trading on something like TALO. Energy's getting a play, metals are getting a play. Obviously, this is all based on the US dollar. But for right now, tallow, I'm going to have to hold off on this. Downside of firm. Ooh, buy now, pay later. Uh-huh. They're going to get bought at some point. They really will because we are incapable of not engaging in constant levels of debt. Your key line in the sand here is going to be the 50-day, which is around that 78.50 level. If you want to try to ride momentum to the downside, this is really about the banking sector at the moment. So I'm going to be a little cautious on this. I will tell you this, if it gets above that 78.80 level, there's upside to 90. But the question is, where are we right now in our credit cycle and how significant is this reserves issue? Remember, that move already happened. We already had that move in the last week and a half. So it got smoked in the last week. But if it holds, it's worth going to the downside. But if it gets back above its 50, I hate to say it, I'm going to have to go long a firm. It goes against everything I stand for, but this is where we are. A&F, this is a Jeffrey Bierman special. Great momentum stock, great cyclical stock, great name to trade above moving averages. I'm going to continue to focus on downside here and probably buy at around the 88 level on a put, somewhere around that October 17th level. But I'm going to keep a tight stop here. And if we break again above these key moving averages, A&F has upside and downside. It's all going to be on the side, though, of that 8-day. Materials continuing to do what they do, strengthen the metals, strengthen the utilities, breaking down in the defensives. And I want to remind you that when it comes to defensives breaking down, money is rotating into higher beta. Don and I talked about this last week when we were live. He was saying, like, you got to watch the HIBL, the XLP, like this stuff breaks down, it rotates out because this is where money goes when things are in danger. And the XLP breaking lower, consumer cyclical, chopping around. I got a trade coming up on Riot. I don't I don't see how you don't trade this stock. It's it's just perfect in its momentum. It's perfect in the way that it's been upgraded. It is a pure representation of everything that is going on in our environment. And if you are in the Tesla 4D with us, we're going to make a trade this week and we're going to do it around Riot. And it's going to be a very high probability trade that is focused explicitly on the upgrades that it has just received. This is an unbelievable story because, again, it's all about the mining and the energy capacity and the AI opportunities that continue to emerge. I love to trade NVIDIA. I think it's obviously the center of the universe right now. And again, we're popping above these key moving averages. But you see the momentum on a name like Riot. Riot can't do anything without NVIDIA. It can't. And all the upgrades that Riot is getting right now, and it's gotten a couple, like some in the $25 to $30 level. Those upgrades are explicitly on the back of the AI trade and explicitly on the back of the utilization of NVIDIA. But when I see the momentum like this and I see the optimism like this, I have a feeling that this stock is probably going to turn back around and go to 14. And I want to take advantage of that. I want to take advantage of that. But for the most part, again, you see these moves 12 to 18 in the last month and a half. That's not an accident. And it really is all about understanding the momentum and how to trade that momentum and the upside that is associated with it. Riot, again, has a path to 20 if you just want to buy the stock, set a stop at that $17 level, and you could buy a call at the 17 level and sell at the 20 level. But really, this is a pure credit spread candidate, and I love the high probability focus here because, once again, if you're selling spreads and you have a higher probability of success and the stock moves higher, the value of the credit spread that you sold has gone down. Therefore, you buy it back and you pocket the gains. On top of that, KGEI, Colibri Global Energy. What do you do? Well, you already know. Buy the stock right at this level. You got a tight stop here, but 568. I'm buying the stock at 568. Well, now it's 584. Buying the stock at the open. I'm setting a stop back at the 568 level, and I'm looking for a move back there. But I'll take 650. I'll take seven. And I want you to keep in mind as the stock moves higher, if it continues to see a recovery in its momentum, keep your stop tight. If you get to $6, make your stop 590. It's that type of candidate. Keep very tight stops on this, 2%. I know it doesn't sound like much, but this is the type of environment that we are operating in. Somebody's going to pull the rug at some point, and you don't want to be left holding the bag. That's why you have to focus on momentum. KPOH. I thought that this said hardcore parkour, but it's Park Ohio Holdings. Same thing here, industrial logistics. Very high F score, very cheap, just below its 20-day. Looking back to that 23 level, this is not a stock I'm trading options on. Just buying the stock, buying for 20, trying to sell for 23. And I know that doesn't sound like a huge move, but do the math. What is 23 divided by 20? Minus 1, 15%. All right, let's jump back in. Best Buys are ghost towns now. I mean, I went there. I went to Best Buy yesterday and I go up. I was buying my daughter a pack of baseball cards and I was checking in on something else. And I'm wearing a Bills shirt. I'm not even wearing a jersey. And the guy just starts complaining to me about Bills fans. He's like, I went to the Ravens Bills game and the Bills fans were just so rude. And I said, You did something. You did something. There's 0% chance that a Bills fan was trying to start a fight. We legitimately live in self-pity. That's not how it works. For the VWAP deviation bands, do you use regular VWAP or intraday VWAP? We are the best. We legitimately don't care. They threw the guy, look, let's put it this way. Scott Norwood ruined my childhood. Wide right against the Giants, 1990, Super Bowl 25. We didn't care. They had a parade the following 2 days later. Norwood got up, spoke, apologized, started to cry, and they chanted his name for 27 minutes. It's fine. It's great. Best fans in sports. All right. VWeb. So, a real quick reminder when it comes to volume weighted average price, you are going to candles and you are adding VWAP, right? Oh, wait, hold on. One moment. Sorry, I'm an idiot. There we go. Cool. Volume weighted average price. That's what will come up. And you are doing anchor session. You're focusing on session. Your source is going to be the high, the low, and the close. And your bands are the standard deviation level. Now you can anchor, and we talk about this obviously in the Tesla program as well. And you can have an anchor to the previous day's close, but it's just standard 1 minute. Okay. The other teams were better. Uh, I hate to say it. I think that that's a good question. This should be a theme of the day for TheoTrade. Who are the worst fans in sports and who are the best? I'm gonna just say it. I've never seen fans traveling on worse behavior than Baltimore Ravens fans. It's not even close. I went to the Miami Ravens game 3 years ago, and Miami beat the Ravens, and the Miami fans could not have been nicer. They were just so happy that their terrible team was winning, and they were like, "Hey, we want to buy you a beer because like we finally won a game." And then they would turn around and like somebody would sucker punch them in the back of the head. Eagles fans are Eagles fans aren't bad on the road. Baseball fans, I'm gonna go Yankees Red Sox. So we live in Baltimore, and we're going to finish on this. And then Don's coming up. I will be back at 3 o'clock. If you haven't seen my presentation on Tesla 4D, please click that link. We're going to be busy next Monday, next Tuesday. We're going to have our first masterclass session, and then we're going to start the 6 weeks. But Yankees fans can come to Baltimore, and we just played them. Yankees fans can come to Baltimore, and the seats that we have at that my family has had since 1993, um, they're $70. They're right behind the dugout. Those seats are $1,000 at Yankee Stadium. So Yankees fans can come to Baltimore, stay in a hotel, go to 3 games, have dinner, and it's cheaper. They are not bad. They're cocky during the game, but then they're wondering. Boston Red Sox fans come down here. Same thing, right? It's very expensive at Fenway. They come down here and they do this thing where they legitimately just crap on the city. Now, listen, mocking Baltimore is our thing, Don. Mocking Baltimore is our thing. We get to talk about our town. You don't get to do that. But they say like the meanest things ever, and you just go, don't come if you don't like it. Stay up there and watch it. It's fine, man. Go watch Good Will Hunting. I don't have time for this. All right, 9:22. I hope you guys all have a great day. Don's coming up. He's going to throw some music on in a second. I'll be back at 3 o'clock. Guys, be active. And again, we're going to have that trade on Riot today in the next couple of days for new members of the NVIDIA 4D. Have a great day.
Oh, what we're living in. Let me tell ya.